The second quarter starts off with a bullish tone while traders look to the Fed notes later today for clues of potential future quantitative easing. Auto sales numbers will also be a focus in today's action. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with TheStreet, and together we bring you the morning call. So Scott, stocks started the day off a little bit slow yesterday, but they built as the day went on, pretty much started the second quarter with a bang. So is digestion in store today?
It seems like the futures are off a little bit after yesterday's move, and at the end of the day, the action got a little lethargic. People were talking about the light volume, but this is the way it's been even last quarter with those sizable gains. So as far as a slow start yesterday, at least we had a few clues that we were going to go to the upside. One being Apple, that took off right, from the get-go to show you that tech might have some energy. And then the other sectors just joined from negative to positive. You look at the chart here of the S&P, you'll see that we're in the same methodical trend. Here is the macro trend that's been intact, that hasn't even been tested. Actually, this is the spiders. Here is this intermediate trend that has been followed perfectly. This is the first test right here in late February. And then you had a nice move back through the highs, and then we retested the 20-day, made new highs, retested the 20-day, made new highs. It looks very similar to the first quarter to me. So I would say as long as we stay like this, you have to stay the course.
All right, and we've got the Good Friday holiday this week and March payrolls report coming out that day. So are you anticipating lighter volume for the rest of the week? Maybe traders might be a little hesitant to make big bets ahead of that data?
I think even if we didn't have a light week, I think traders are right now trying not to make big bets, including me. And I feel like every time I've tried to lighten up on positions, I get sucked back in because stocks can, continue to act well. So when you have a lighter week, a holiday, you do get lighter volume. And there's been lighter volume even, I would say for the last few months or last few years. But with the jobs number on Friday and us not being at work and just a futures market open, you'll probably have traders being a little bit more risk averse, but they also don't want to go out short in front of it when they can't control their positions either. So you're going to see light volume.
And the Fed's minutes, of course, out later today. So what's the focus ahead of it?
I think the focus is people want to figure out whether or not they could really keep the lid on interest rates. Everyone keeps saying the bond market's going to continue to get hurt. You could be long the TLB, the TBTs, short the TLTs, and you know what? That trade was very short term. So it looks right now that they do have, rates being pressured. But if they do start talking a lot more positively from the minutes about the economy, maybe they hint of, that they might have to, let them go up a little bit sooner. You'll see a little bit of a reshuffle. But for right now, let's just hope it's the same rhetoric that they've had, which is they're going to stay the course. They're going to be accommodative. And then, the market will stay in this trend that we've been following. And that has been very rewarding, even though it's a little lethargic at times.
And we saw some rotation into commodities yesterday and some climbing prices. So which are you focusing on today?
Well, that's what you wanted to do. You come into second quarter, you want to see where's the reshuffle, where's the money potentially going to go, and gold, precious metals, silver, they've been out of play during the first quarter, so I wanted to see if they would come back here. So I've been trying to look for patterns that could potentially give you a lower point entry for what could be a second half move. So if you look here first, we'll go into silver, you will see that, I talk about inverse head and shoulders patterns, and I saw a lot of these in December in the financials, I saw them in the OIHs, I saw them all around. So they're showing their face now in some of these precious metals. And here's your left shoulder, okay? Here's your head, and here's your right shoulder. So again, we're anticipating here. So if you wanted to be long some silver, like I did, I went long right here once we made this higher low. I'll let you see it a little bit closer so you can really take a look here. So here is where, I bought some, and then yesterday is where I added some as I tried to clear this intermediate trend line. But this is going to be slow. It's not going to be a barn burner move in the beginning because it's still not confirmed. But yesterday was decent. I would say on a micro level, it's got to hold above 31.47. On a more macro level, you could stay in tier 1 and use this as your pivot right here of about 30.21. But if we start getting above yesterday's high of 32.29, you then have this moving average, and then this pivot comes in right around where we sold off that last Fed time, so right around 34. So I do think that we have some room to get back to 34, and we'll see how it acts along the way to see whether or not it's going to be a real move or just some type of slow bounce.
And you've also talked about the head and shoulders pattern in terms of the GLD. So where are we at in terms of that?
Well, this inverse head and shoulders pattern, because there are two of them, just to clarify. You have the head and shoulders top, which is a distribution pattern, which typically leads to a correction. Then you have an inverse head and shoulders pattern, which is an accumulation pattern. So right now it can be seen that gold is still in an intermediate downtrend, but it's being accumulated here. So if you look at this pattern, I'll show it to you a little bit closer up. Here, I just lost my little toolbar here. Let's get this back over here. If you see right here, that here is a very similar pattern, okay, as silver. So you don't have to be in everything. Here's your left shoulder, your head, your right shoulder. Here's that intermediate trend line, and here's that pivot bottom. So now we go a little bit closer so you can see the actual prices here. Okay, you could have, this day went long gold, where I went long silver, versus pivot low. Here's your tier 1, but it's still not confirmed that we're going to break this trend line, so don't get much heavier. What I would say is if GLD started getting above this 164.89, then you add to it because it's breaking this trend of a high, lower high, lower high. So that would be your entry for more for a potential move back to where we tried to retest around, what is this, 167. I remember talking about this. If you remember, after Fed Day, I was like, if we don't get back above or take back a third of this wider range bar, we're going to be trapped in a little bit of an intermediate downtrend, which is what we've been in. So now we have this lower pivot, and it's time to see whether we break. So that's why also this is very important, because if we turn tail at this line and continue lower, your stop has to be this low here of 158. So right now, we're kind of anticipating. Sometimes you anticipate and you go tier 1 to have some exposure, and then that gives you at least commitment for when it starts working and gets validated. You could add to it into strength, and then you have a great average cost.
Well, with China growth fears putting a damper on optimism, I'm wondering what your game plan is with XLE, because this is an ETF that suffered notable losses over the past month.
Yeah, well, the XLE and the OAH were not the place to be in the first quarter. So we're trying to see whether or not if some inflows come back here. So if you look here at the XLE, it did outperform yesterday, but still it's in this downtrend. So I would say here you could, again, be in tier 1 versus this low here. The low here is 70.17. And if it starts to break this descending channel, because they typically break to the upside, get a little bit more aggressive. I like XOM in this group. I do think that this is acting best. It's above the moving averages. It might take some time, but I think this is for the investor. And if it starts getting above this level here, about 87, 83, I think we see new highs. So if you want to stock in that group, XOM is the one that I would go with.
And quickly, OIH, what's your game plan?
OAH, it's been a little bit out of play. If you're still in tier 1 from the first quarter, it's fine. SLB was upgraded today, so take a look at how Schlumberger acts. OAH is, I think, tier 1, and it's still going to need some time.
All right, well, coming up, we're going to dive into the trenches with some IPOs that have issued secondaries and why they should be on your radar. So stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back, and we're talking about IPOs that have issued secondaries and why they should be on your radar. So first, tell us why the focus on these, Scott.
Because everyone wants to know, how do I find the next winner? How do I get involved in a stock that could be 2 to 5 bagger in the next 2 to 5 years? And typically, they're fresh IPOs, fresh companies that come to the market that act very well, that have a great business model. So typically, though, when IPOs come public, in the first 3 to 6 months, unfortunately, they have some secondaries because they have to get some old shareholders out of the way or some lockups. So there's some pressure here. So sometimes when they have secondaries, they stop the momentum of the stock short term, but then they continue to the upside. So it's good to know where that secondary price is, so then you can get right in around where the pros are. So if you look at the first one, Coors, you will see that this stock had a really nice move. Okay, this is where it came public. This was your first entry, and from there you had a nice methodical move all the way up to 50. And then they announced a secondary. Why not? Look at the price. So what they wanted to do is get the resistance out of the way and clear out some shareholders. So right now, I would say, right around this 44, this low here is 44.46. This is support. So if you are a short-term trader, you'd be long versus 44. And if it starts to get above this mini pivot of about 48, you add to it, and then you have the recent highs here of about 50. If this level were to break and they break price, I would say for this to be any good, you want to make sure it holds this 41. So I would say tier 1 here for a momentum trader. Above this, you add for a trade back to the highs. But I think for an investor, who wants to be in cores. Don't make it too complicated. As a trader, we talk about tier systems, but I do think that if you wanted to be long some here, maybe with a stop at 41, you put it in the drawer, and at some point in the next few years, this stock could be a double.
All right, well, on March 30th, Dunkin' Donuts announced it was bumping up the size and price of its secondary offering. You are, of course, long Dunkin'. So what's holding your interest in this stock?
Well, I think Dunkin' Donuts, just first of all, I love their iced coffee, and I like the fact that they have coffees, different lattes. They're expanding overseas, and it's just it's almost like a little bit of a Starbucks / McDonald's. And we both know the performance of Starbucks and McDonald's. If you got involved within the first year of their new issues, you're probably up 8 to 10-fold or even more than that. So with Dunkin' Donuts, it's been out public for less than a year, but over 9 months. If you look here at the little pattern, because I do trade patterns, it's been acting pretty well. This was a new issue price. Okay, and then from August all the way through February, it's consolidated. You know, they have to get everyone out of the way. They have to accumulate in the institutions. This is really when I started looking at it again, right around this 29. From here was a great momentum trade back to the highs. That was a good spot to sell some because typically you do get some resistance prior from the IPO. And then right around here, they announced a secondary, which kind of is upsetting if you're involved because it slows it down. But overall, it's healthy. It gets people out of it where it's not resistance moving forward. And that price right here was $29.50. So if you look a little closer, you know, I got back involved on this day when it held price, showing institutional support. So I'm in Dunkin' Donuts. I think that as long as it holds 30 short term, you stay with it. If it starts getting above yesterday's high of 30.89, you add to it. And at some point, it gets above 33. And I do think that this one, over the course of the next 2 to 3 years, it could be a double or triple also. It's a newbie out there. It's got a great business model, and I think that this is something that you could invest in besides just trade.
All right, and Zynga, of course, also recently pricing a secondary offering of almost 43 million shares at $12 each, with all the stock coming from selling holders. The stock reacted well off the bat, but some analysts believe it's not sustainable at these levels. You are long the stock, so where's the resistance level here?
This one's a little bit more risky. It's in the social media space. We just saw what happened with Groupon. They're restating some of their financials, so you saw some pressure. I do think this one could make it. You just have to have a little bit more risk tolerance. That's why I went with Coors, went with Dunkin'. This one's a little bit riskier. And look what happened on the new issue price. It also wasn't accepted so well. So if you look here at the chart, you will see, on the IPO day, it kind of failed. That's why we also say don't get involved on the first day with that art of the first day of trading unless you know what you're doing, and it never went above the opening price. It needed to be accumulated. Then it perked back up. This was a nice trade when it crossed the IPO price of about, $11.50, and look at that move to 14. And then I do remember this topping tail. I was long this day, sold some here, and then I got stopped out of some. So this was a short-term top. And then you had the secondary announcement. There are two things that are going on right now, okay? If you bring it back, there are two different cross currents. Okay, first, you don't like the fact that it was a lot of insiders that sold stock, but a lot of them have much bigger holdings, so they would have to do it at some point, so they'd rather do it here to make the mutual funds happy that they can get in at this low price. So from what I'm hearing from the deal is that a lot of mutual funds got the deal, not the hedge funds, and they typically hold longer. And a lot of the hedge funds got short so they can cover with the deal, which they weren't able to do. So sometimes you never know who to believe, so you believe in the price action. So right now, I'm long Zynga, and I will get out if it breaks this level on the chart. Okay, this is my level right here. This is the low. This is 1220. If it were to break 1220, I'll get out. Okay, sometimes it'll break the price 12, capitulate people out, and then if it comes back up, I'll look at it later. But right now, I'm going to stay with it as long as it holds that level. If it continues to go sideways and starts to break above my little yellow marker here, this lower pivot, and starts getting above 1328, I think you can add to it, and then it's back in this overall channel. Then with some time, maybe with a few more quarters behind them, it could start getting above this 14 and change, or maybe even the sex appeal of Facebook coming out in the next few months gets it above there. So it's a trading vehicle, but if you want to be long as an investor, you could buy it around here, put your stop at, even just say, if you want to be safer or not as close knit like I am, 11.80, because that means it broke price. So you have like $1 risk to what could be a $5 to $10 reward in Zynga.
All right, solid game plan there. But just finally, earlier in March, InvenSense issued a secondary offering of 6.5 million shares. The stock obviously liked the news as it has continued to rise, but is it too late to get in on this one?
This one I'm not really focused on. It was just an example on how they did a secondary. People kind of forgot about it, and then it made new highs. So that happened here. It's pulled off a little bit since. So I want to say that all three of the stocks I just named before did a secondary recently. So people get a little upset because short term, you're not getting gratified. Don't lose sight, because all three of those stocks can make new highs, but at least you have your stops in place to know where to trade it against.
All right, just some quick hits here, Scott. Apple rose 3.2% yesterday. You didn't touch it yesterday. It's the first time in a long time. What's your game plan with Apple now?
Well, Apple had those 3 down days, a loss of 10 days. I had a little short in the brain yesterday. So when I said to myself, if Apple's going to really be a short, it's not going to get above 604 to 607. It went above there in the first 15 minutes. So I was like, you know what? It's not a short, but I'm not going to chase it. And now Apple looks really good. It's opening on 2 more upgrades from Piper and JP Morgan. I would say short term, if you're long it, sell some into the $4 upgrade. What I would like to do from a trading aspect, I'm not in this right now. So I would say if it comes back and retests the 621.45, the prior higher and holds, maybe I'll add some. Or at this point, it's a little bit tougher, so I might just stay away. But overall, it looks good. It looks higher. 700 plus is my price target this year. And
you've said that casinos could use a bit of a rest. So where's your entry point with a stock like LVS?
LVS, I'm in tier 1. And I think that it's holding up very well. It's pivoting right now. If you look at the chart right now, I'm not going to add until it starts getting above this area, which is about, what is this? This is 59.60. So I'm in tier 1 verse 56. Here's my stop. If it starts getting above yesterday's high of 58.75, I probably would add there. And then if it clears this pivot, you're going to see it on its way above 60. And my target for the year here is around 65-ish.
Okay, and your long Ren, which we saw perk up a bit yesterday. Should investors get excited about that?
I don't know if every time I get excited about it, I get slapped around. Ren has not been able to sustain an up move. When I see it get above 590 and hold above 590, finally it gets going. I am in it, but I'm not going to start adding to it until I see above 590 and real volume. I'm talking 15 to 20 million shares.
And with banks consolidating, what are you doing with Bank of America?
Bank of America, I missed the price I wanted. I wanted to buy it in that lower area of the wedge, or not the wedge, the channel, which is around 940, and it bounced off there. So with this down open, I might nibble on some Bank of America and see if it can go positive. If you look at the chart here, for those people who think Bank of America is going to $12, $13, obviously it's going to have to get through this 10-10 first. So here was the last time I was really aggressive with Bank of America. I was in tier 1, added a lot here, sold into this move, and since then I haven't really touched it. So yesterday it held 940. I still think it looks good. I think you could add, maybe on weakness if it gets stronger above yesterday's high of 978. And then if it starts getting above this 10-10, you got to go to the weekly chart, because the weekly chart's telling you you can get a move to about $13 at some point this year.
And we saw Ford on the rise yesterday. Are you enticed at all by this play?
Yeah, Ford has a nice channel. I started buying it yesterday. I tried a little bit last week, but yesterday really I saw GM actually moved better. And AutoZone obviously has been a rock star. So Ford, it's a laggard. I hate going with laggards, but you know what? I was a little conservative yesterday. So now if you look here, you look at the weekly chart, it looks really good. Look at this nice consolidation. The highs here were 19. It's been coming in. If you look on this weekly chart, it actually broke, this downtrend right here. It's been going sideways. So it really has to get above about 1290 to 1305, and then I do think at some point this year you could see 15. So this is a decent entry for macro investors. If you go to the daily chart, you'll see, this is your inside range where I started buying it. If it can get above this, you should be adding, which is around 1270. But the real level to get up and clear would be around 13. And just be careful, not be careful, just don't expect much. It's not a barn burning trade. You're not going to get rich off of it. But if you want another position within 8 to 10 that you want to hold for the year, because I think this year we go higher. Whether or not we pull it or not, doesn't matter. I think it'll be viable at some point. Ford is something you can go with.
And as we said earlier, of course, we have the Fed notes ahead of us today. So what's your strategy going into today's trading?
I want to see, what type of trade we have. I want to see if it's like lethargic, we're starting off weak. If we go positive like we did yesterday, I'll see where we are versus yesterday's highs once we get around the Fed minutes. Or if we're kind of weak all day, maybe the Fed minutes will be a catalyst, to get us positive. So I don't think it's going to be such a focus, but since there's a lack of news and it's a holiday, people are going to be looking at that. So as long as they stay accommodative, as long as they don't change their language, which I don't think they will, I think it'll just be par for the course.
All right. Well, thanks so much, Scott. Happy trading, everyone. Have a great day.